Welcome to Get It. If you're preparing for an AML analyst interview in 2025, this video gives you 20 essential AML interview questions and answers, plus 3 SAR scenarios you can reuse in your interview. We'll cover FATF 40 recommendations, OFAC sanctions and the 50% rule, FinCEN SAR filing timelines, CDD versus ED, structuring versus layering, trade-based money laundering, crypto and VASP risk, PEPs, and more. Let's get you hired. Question number 1. What is anti-money laundering, AML?
Sample answer. Anti-money laundering is the set of laws, regulations, controls, and operational processes that financial institutions use to detect, prevent, and report attempts to disguise illegally obtained funds as legitimate. A strong AML program aligns to global standards like the FATF recommendations and local law, uses a risk-based approach, and relies on high-quality KYC, monitoring, and reporting to protect the integrity of the financial system.
Question number 2. Why is AML critical for financial institutions?
Sample answer. Effective AML protects institutions from legal penalties, sanctions exposure, and reputational damage while enabling financial crime investigations. Robust programs reduce regulatory risk, preserve correspondent relationships, and promote customer and market trust by ensuring suspicious activity is identified and reported to the appropriate financial intelligence unit, e.g., FinCEN in the U.S.
Question number 3. What are the stages of money laundering?
Sample answer. The classic model is placement, layering, and integration. Placement. Illicit cash enters the system. Layering. Complex transfers, conversions, or structuring obscure the origin. Integration. Funds re-enter the economy appearing legitimate. Interviewers expect you to know examples for each stage and how your controls target them.
Question number 4. How do you stay current on evolving AML risks?
Sample answer. I track FATF updates, FinCEN guidance and FAQs, OFAC sanctions updates, and the FFIE-CBSA, AML manual for U.S. expectations. I also follow credible industry briefings and trainings. This mix keeps me aligned to global standards and jurisdiction-specific rules.
Question number 4. What common money laundering techniques do you watch for?
Sample answer. Common topologies include cash structuring or smurfing, shell companies and opaque beneficial ownership, trade-based money laundering, over/under invoicing, phantom shipments, third-party wires and money mule activity, funnel accounts, and activity involving higher-risk crypto exchanges or unregistered VASPs.
Question number 6. What's the difference between money laundering and terrorist financing?
Sample answer. Money laundering disguises the illicit origin of funds from crimes. Terrorist financing aims to fund terrorist activity, and funds can come from legal or illegal sources. Controls overlap, but the objective and some indicators differ. FATF sets the global framework for both AML and CFT.
Question number 7. Scenario, crypto and VASP risk. How would you respond?
Sample answer. Assess profile fit, activity velocity, and counterparties. Determine whether flows touch higher risk or unregistered exchanges. Apply ED to verify source of funds, purpose, beneficiaries, and jurisdictions. If patterns remain inconsistent with the KYC profile, or indicate sanctions or AML risk, escalate and consider SAR filing per policy.
Question number 8. Structuring versus layering. What's the difference?
Sample answer. Structuring breaks cash into sub-threshold transactions to evade reporting or monitoring. Layering is the broader process of obfuscating origin through multiple movements, entities, and jurisdictions. Structuring is often part of layering, but the interview expects you to define both cleanly and tie to controls.
Question number 9. SAR basics. When do you file and what matters most in the narrative?
Sample answer. In the U.S., a SAR is due within 30 calendar days of initial detection of facts that may support filing. If no suspect is identified, institutions may take up to 60 days to try to identify one, but never more than 60 days from initial detection. The narrative must be clear and complete: who, what, when, where, why, and how, so law enforcement can act on it. For continuing activity, institutions typically file follow-up SARs on a periodic cadence as guided by FinCEN's FAQs.
Question number 10. Who are the key standard setters and regulators you align to?
Sample answer. Globally, the FATF 40 recommendations. In the U.S., FinCEN for BSA, AML rules and SARs, OFAC for sanctions, and prudential regulators referencing the FFIEC-BSA, AML manual. My work maps program controls to these authorities.
Question number 11. How do you manage cross-border and sanctions risk?
Sample answer. I apply a risk-based approach, identify high-risk jurisdictions, screen customers and transactions against sanctions lists, and tailor ED and monitoring for exposure. When issues arise, I follow escalation, blocking, rejecting, and reporting procedures consistent with OFAC and local law.
Question number 12. Give examples of AML red flags you monitor.
Sample answer. Rapid funds movement, unusual cash intensity, third-party activity, inconsistent business purpose, unusual trade patterns, beneficial ownership opacity, transactions inconsistent with KYC profile, and links to higher-risk jurisdictions or sectors.
Question number 13. CDD versus ED. Explain the difference and when ED is required.
Sample answer. CDD establishes the customer's identity, nature and purpose of the relationship, and an expected activity profile with ongoing monitoring. ED applies when risk is higher, e.g., PEPs, high-risk geographies, or complex structures, and requires deeper verification, additional information, and enhanced monitoring. In the U.S., expectations are outlined in the FFIEC-BSA, AML manual and the beneficial ownership rule for legal entities.
Question number 14. OFAC and the 50% rule. What should analysts know?
Sample answer. Under OFAC's 50% rule, an entity is blocked if one or more blocked persons collectively own 50% or more of it, directly or indirectly. The rule addresses ownership, not mere control, and indirect or aggregated ownership can trigger blocking even when the entity isn't named. This is why beneficial ownership data and list screening must work together.
Question number 15. What are PEPs and how are they handled?
Sample answer. A politically exposed person is someone entrusted with a prominent public function, and thus at higher risk of corruption or abuse of office. PEPs require additional AML, CFT measures such as ED, senior management approval where applicable, and enhanced monitoring.
Question number 16. How do you prepare for regulatory exams or internal audits?
Sample answer. I make sure KYC files are accurate and complete, alert dispositioning is well documented, models and thresholds have governance and QA evidence, training logs are current, and issues, findings have remediation plans. I treat exams as a feedback loop to strengthen the program.
Question number 17. How do you reconcile a mismatch between a customer's stated income and their activity?
Sample answer. I perform a risk-based review across historical transactions, request supporting documents to explain anomalies, assess jurisdiction and sector risk, and escalate if inconsistencies remain. If warranted under policy and law, I will file a SAR on the facts and narrative, not on suspicions alone.
Question number 18. Transaction monitoring systems. What matters to you?
Sample answer. I focus on coverage, rules, scenarios, and ML models, data quality, threshold tuning to reduce false positives without losing sensitivity, peer and segmentation logic, alert QA, and feedback loops from investigators back to the tuning team. Tools differ, but governance and documentation are non-negotiable.
Question number 19. A sanctions list hit appears during screening. What's your workflow?
Sample answer. Pause the transaction, verify identifiers to rule out a false positive, then block or reject as appropriate and report per OFAC procedures and institutional policy. I also review the overall relationship, assess secondary exposure via ownership, and ensure the case file is complete for audit and regulators.
Question number 20. Explain the 3 lines of defense in AML.
Sample answer. First line is the business, which owns and operates controls day-to-day. Second line is compliance, which sets policy, oversight, and monitoring. Third line is internal audit, which provides independent assurance to the board on the design and effectiveness of the AML program.
SAR Scenario 1. Cash structuring pattern. How would you handle it? A longtime small cafe customer suddenly makes 5 cash deposits of $9,500 in 7 days. A clear shift from historical activity.
Sample answer. I review prior behavior and variances, document the rationale for suspicion, escalate per policy, and file a SAR within the required timeline. The narrative explains the pattern, context, interviews, and why the activity appears designed to evade reporting thresholds.
SAR Scenario 2, OFAC 50% rule via indirect ownership. How would you handle it? A supplier isn't on the SDN list by name, but screening and ownership checks reveal it is 50% or more owned in the aggregate by blocked parties through layered entities.
Sample answer. I block as required, report per OFAC procedures, and document the beneficial ownership tracing that supported the decision. I also review related counterparties for secondary exposure.
SAR Scenario 3, crypto exchange flows inconsistent with profile. A retail customer begins frequent transfers to and from higher risk VASPs, with spikes in amounts and timing inconsistent with stated income.
Sample answer. I verify source of funds, clarify purpose, assess jurisdiction and exchange risk, and examine wallet or exchange identifiers. If explanations don't reconcile with KYC profile, I escalate and consider SAR filing consistent with policy and FinCEN guidance. For continuing activity, I follow internal cadence aligned to FinCEN's FAQs.
Rapid-fire add-ons. Interviewers ask, CDD versus beneficial ownership.
For legal entity customers, I verify beneficial owners consistent with regulation and incorporate those procedures into the AML program. This is critical to detect shells and fronts.
PEPs.
For PEPs and close associates, I apply justify source of wealth, and hidden monitoring.
Narrative quality.
I use the SAR to tell a clear, chronological story. Indicators, analysis, why it's suspicious, and the risk context, so law enforcement can act.
If this AML interview questions and answers guide helped you prep for 2025, subscribe to Get It. Comment, cheat sheet, below and I'll share a one-page summary with the 20 answers and SAR scenarios you can bring to your interview. Disclaimer. This content is for educational purposes only and is not financial, legal, or compliance advice. Regulations vary by jurisdiction. Always follow your institution's policies and current laws.